Welcome back. We're looking at an urgent report on AMC today, all about the defense of that $2.11 support level.
Right, and what the technicals might say is coming next, that defense of 211 is clearly the whole anchor of the piece.
It is. But that urgency, isn't that what the audience for this kind of thing wants? The high drama?
Recalibrating the emergency framing is really key to sustaining long-term engagement.
So you think it's too much?
I think it could be. The weakness is that constantly using language like emergency or do or die, it just risks fatigue. I mean, if that level gets tested over and over...
The drama wears off.
Exactly. It wears off and you start to lose credibility. You're trading that long-term trust for a short-term, panic click.
So the suggestion is to shift away from that panic framing, define it more as a critical moment?
A critical inflection point, yes. You maintain all the seriousness, all the tension, but without burning out your audience.
Okay, so give me a concrete example. What does that look like?
Well, instead of the siren emoji and emergency update, maybe you go with a title like Critical Inflection Point, the 2-11 Showdown.
Or something like The Technical Battle for 211 Held, What Happens Now?
Exactly. It keeps that volatility narrative strong, but it feels more sustainable.
Okay, so that's the tone. Let's dig into the substance. Does the analysis really use the business fundamentals to back up the technicals?
And that's our second point. Bolstering the connection between the technical action and the fundamental drivers is a huge opportunity here.
Because it feels a little detached right now.
It does. I mean, the report mentions that revenue per patron is at a record high, that's a powerful piece of data.
It's a huge fundamental positive.
But it's just sort of mentioned, not woven into the bullish case. The rally to 250, for instance, seems to hang entirely on short covering and some general Q4 movie hype.
It needs more than that. Investors need to know why the short should be scared now.
Precisely. The suggestion is to integrate that record revenue data directly into the bullish reversal scenario. Give that technical move some real fundamental weight.
So the 250 target has a real reason behind it, not just a line on a chart?
You got it. So for a concrete example, when you talk about the key technical trigger, that daily close above 222.
Right.
Don't just tie it to movie hype. Explicitly connect it to the fact that, and I quote, the business is extracting more value from every customer than ever before.
So that makes the Q4 revenue potential feel less like hope and more like a real quantifiable catalyst.
It makes the target price far more believable.
Okay, so let's wrap it up. The two big opportunities here are, 1, adjusting that tonal urgency to build long-term trust.
And 2, integrating that really strong fundamental data, especially the record revenue per patron, to give your bullish targets a solid foundation.
Adjust the urgency and use the data you already have to make a much stronger case.
That's it. It will make the whole report feel much more robust. We encourage you to implement these changes, and please submit